I'm Ashton Addison from Crypto Coin Show, and today on Blockchain Interviews we have Dan O'Prey, the Chief Product Officer of Bakkt. Dan, welcome to the show, and thanks for taking the time.
Thanks so much for having me, Ashton. Great to be here.
You're very welcome. Excited to dive into Bitcoin, custody, trading, what Bakkt is working on, and a little bit about yourself. I'd love to start off the conversation with just hearing a little bit about what you've been doing in the space and how that led up to being so interested in Bitcoin and Bakkt.
Sure. No, yeah, thanks very much. So you said Dan O'Prey, Chief Product Officer at Bakkt. Been here for about 2 years, but time in the wider space really over the last 9, almost 10 years now. Got into Bitcoin personally in about 2013 after reading the white paper. Was fascinated by the intersection of the economic element and the technology element, and really the opportunity to have internet native money just sort of instantly struck me as one of those, who knows where it's going to go, but it's going to be big. But 10 years ago, market was a very different space. I just finished my last startup in the cloud computing space, just left that, and would have loved to have done a Bitcoin startup, but really didn't know if the market was quite mature enough for that. Or if I'd be waiting, 10 years for the market to pick up. So did something adjacent to Bitcoin, started to explore, what's commonly known now as blockchain technology, looking at, are there other applications of the underlying tech behind Bitcoin that could be used for more traditional use cases that maybe are a little nearer term. So I started a company called Hyperledger, which was the first sort of open source permissioned or enterprise blockchain, no native cryptocurrency. Again, really much more of just a technology play to allow different companies to issue assets and transfer and clear and settle between them, very much in a sort of compliant way, much more similar to how traditional systems work, but without the need for all the reconciliation and disparate siloed systems and time delays and expense that come with a lot of the currently siloed solutions. So long story short, that ended up being acquired by a company called Digital Asset in New York. So I moved over here, worked there for about 6 years, including then creating or helping to create Hyperledger at the Linux Foundation, which was sort of taking what we had started, but working with many large companies like IBM, JP Morgan, DTCC, Accenture, Intel, and many others to really say, let's, this is all open source. This is a network play. Let's all collaborate and try to contribute to the same code base that we can all leverage and build businesses around. So I was the chair of the marketing committee there for about 3 years, learned a ton, way more than I ever perhaps wanted to, on how payments and, equities, clearing and settlement, post-trade systems really work. But, fascinating knowledge that interestingly is now sort of being reapplied in some ways to the Bitcoin space. But a couple of years ago, got into the space for Bitcoin passion, felt the time was right, wanted to get back into Bitcoin, and Bakkt seemed like a perfect opportunity to do that.
Amazing. That's a great backstory. And I'm very familiar with the latter half of Hyperledger and Fabric and what they've been working on. We've had them on the show a few times. That's great to hear that, you were part of that inception. So it's very cool. And it's great to see that you're also going back to, sort of how people get involved normally in the blockchain space is through, at least the ones early on, when there wasn't a lot in the space, is through reading the Bitcoin white paper and looking at, what this vision of what Bitcoin will become, now 10 years later and hopefully 100 years later and on. I feel like we're still early on. I'm curious on when you first read through the Bitcoin white paper and looked to get involved into the blockchain industry, compared to what we're seeing now, 9, 10 years later, do you sort of like Bitcoin and the industry for the same reasons that you first thought of when you got into it?
I'd say by and large, yes. The title of the white paper being peer-to-peer electronic cash system really, to me personally, is still the most interesting application and use case and opportunity for companies in the space. Perhaps the narrative around Bitcoin in particular has shifted a little bit more part out of necessity, part out of lack of scaling capabilities towards this sort of digital gold, buy it, hold it, wait, inflation hedge mechanism, which, it wasn't, just intended to be a non-custodial, bearer instrument or gold equivalent. It was meant to be used for payments. So I think that narrative, over the last 5 years has been the primary one around Bitcoin. I think that's still perfectly valid and a use case. And, Bitcoin's $500 billion, gold's 13 trillion or 8 trillion, something like that. So there's still a lot of growth just in that particular use case, but money and payments is many trillions. So, part of what I'm hoping we can do at Bakkt is help, shift that narrative from just the digital gold use case to the actual use it, utility, provide everyday value use cases.
Yeah, you're completely right. I feel like it has that promise of being like a digital gold, but it also has so much more. And looking through the white paper, and when Bitcoin didn't have a lot of infrastructure behind it, trying to envision how we could get to that level of adoption of something that is multi-trillion-dollar market cap, I feel like we need companies like Bakkt to have those custody solutions, or different ways to trade and hold, and actually provide other utility as a form of money for Bitcoin.
Yeah, I mean, I sort of see us simply as, trying to be an on-ramp for the next 100 million normal users, right? There are early adopters and enthusiasts and people like ourselves and likely our listeners that, are happy to go out of their way to learn new technologies and what they want to do with it. But the reality is, 95+% of the world want to solve a problem. They want to have convenience. They want to save money. They want something to be faster. They don't want to have to, understand monetary theory before they decide to use something. They just want to make a payment and it to work. And so in order to do that, I think, we're going to have to enable options and make it more convenient, more, trusted, somewhat ironically, but, trusted on-ramps through entities that are regulated, licensed, and audited in order to bring that next wave of mainstream adoption. And then perhaps a subsection of them graduate to, more, crypto native capabilities.
And I feel like a lot of people have seen Bakkt in the headlines with regards to whether it's ETF futures, things like that, but there's a lot to Bakkt. And maybe you could explain for people that have just seen the headlines and they don't really know a lot about Bakkt, what are sort of the different product lines that you guys are focused on and what you all do?
Yeah, sure. I mean, the first thing is, we're a platform company. So, mainstream consumers probably won't see our name, that often. We're kind of the infrastructure, the plumbing behind a lot of companies that are providing these services to the end consumers. And we kind of want to be behind the scenes to some extent on that front. So rather than being a vertically integrated exchange where we are the consumer brand, we're powering multiple different brokerages, fintechs, neobanks, one day traditional financial institutions as well. So that platform behind the scenes for them, we're handling the liquidity, providing the trading, integration with multiple different market makers. We provide the custody. So we're a New York Department of Financial Services trust chartered trust company, where we have an independent company, independent board of managers that not just custodies crypto on behalf of our end partners, retail consumer users, but also directly for institutions as well. So custody and trading are our kind of two core services that we do to really, enable the infrastructure. But then we're a publicly traded company, so all of our financials are audited. We're traded on the New York Stock Exchange, and we have licensing across money transmission and bit license across the entire the US. So we're really sort of one-stop shop for non-crypto companies who want to provide some form of crypto services to their users.
Very cool. And I was going to ask further about Bakkt being a public company. I feel like if there are institutions that are looking to get involved in dipping into Bitcoin, there's probably a certain criteria list on what they're looking for and what kind of custody partner they would want to use. Maybe you can talk about Bakkt as a public company, and also just the criteria that you guys are living up to become that chosen one for them?
Yeah, and I think that's a really interesting point, right? Because on the spectrum, you've got sort of crypto native startups that are, pure, crypto and really trying to be sort of disruptors. And then you've got the TradFi entities who are adopting and leveraging crypto or getting into crypto. And, there are pros and cons of each. But Bakkt is kind of in that sweet spot in the middle of, we are a crypto native independent company, but we span out of the Intercontinental Exchange, ICE, who are actually the owners of the New York Stock Exchange and many other exchange groups. And so we have that, TradFi market infrastructure pedigree and approach, particularly to custody and the operational processes and regulatory compliance. That comes with that, while still having the crypto native knowledge, skill sets, and innovation that comes with being an independent company. Then, as you mentioned, being publicly traded gives institutions a lot of confidence, or our financials are public and audited, being regulated by the NYDFS, one of the most stringent regulators and sort of gold standard of regulation in the world, again, is super helpful. The separation between, I think in the crypto space, that vertical integration I mentioned earlier, where exchanges are also custodians and also brokers and also sometimes prop traders, and right, FTX and Alameda were kind of everything all in one, and don't need to explain why that was an issue. Whereas in the traditional market structure in equities, you'll see as many as like 13 different companies being involved in clearing and settling just a single stock trade, right? So ironically, traditional markets are actually a lot more decentralized in their market structure, at least, than the very tightly coupled, vertically integrated crypto companies. So again, back to Bakkt, right? We have a separate trust company chaired by the chairperson of the New York Stock Exchange, separate board of managers on that, and we ourselves are not an exchange or engaging in any sort of proprietary, position risk activities. So yeah, many more reasons why Bakkt, but those I think are some of the main ones.
And with the regulatory environment in the United States for Bitcoin, do you see it as tough to keep up with, comply? Is it easy? How do you guys handle the constant evolution as Bitcoin continues to grow, on how the regulatory environment is changing?
Yeah, I think, a distinction there between sort of Bitcoin and crypto, or the wider crypto space, in that, at least with Bitcoin, we do have regulatory clarity between the SEC and the CFTC, that other than Bitcoin don't seem to agree on a whole lot yet, but do both agree at least that Bitcoin and possibly its forks are commodities. So that certainly makes dealing with Bitcoin and our partners who deal with Bitcoin a lot easier. And then also, to the earlier point on utility and payments and money, a key property of money is being commodity-like versus being a security. And so we are on the more conservative end of the spectrum. We try to be not just reactive to regulators and the changing climate, but preempt and be as compliant as we think we should be, not just we need to be. So that's led to us reducing the amount of coins that we offer on the platform to more of a reliable, responsibly curated selection, and certainly Bitcoin being the most dominant and most regulatory certain coin of all.
Definitely, yeah. There's the further down the rabbit hole, I guess you could call it, that you go, the more uncertainty there is. There's so much innovation happening in the crypto space beyond Bitcoin, looking for different ways to provide utility. And I think Bitcoin is really that safe space. And we've seen the phrase recently, the flight to quality. Many people have mentioned it, and it's great to hear that people are considering Bitcoin a flight to quality. I'm curious on what the traditional investors in the outside world, outside of Web3, their perception and how it's changing in terms of Bitcoin and it the quality of it compared to other assets, traditional financial instruments. I'm curious on your thoughts on that statement and where we're seeing the perception of Bitcoin going as more people start to move into it.
Yeah, I think, a lot of the lessons over the last couple of years within the crypto space has sort of led to people being a bit more discerning and looking for more key properties, just within the range of crypto assets, and Bitcoin being by far the most decentralized, most secure, being the top traded, top market cap coin since its inception. Certainly has the regulatory clarity that we mentioned certainly gives institutions a lot more comfort relative to other coins that are coming and going in the top 10 every couple of years. And so, within the crypto space, I think Bitcoin's carving out, a bit of a unique characteristic. We've seen many of the institutions recently, particularly around spot ETFs, looking at Bitcoin, starting with Bitcoin. I think institutional funds, sovereign wealth funds, even potentially nation states, right? They all start with Bitcoin first and Bitcoin only first. Perhaps after that, they'll move beyond it. But Bitcoin is the safest, surest, most secure entry point for institutions. And then relative to traditional assets, I think Bitcoin, sort of surprisingly to many, myself included, had been correlated with traditional equities and the stock market versus being that safe haven or that hedge. So that's maybe starting to change, and that people are starting to see it more as a hedge or a safety should traditional assets for, even now fiat currencies. Inflation wasn't something that most in the West really worried about or talked about significantly. That has changed over the last couple of years as well. So I think, it's starting to become more of a general sort of risk, based asset that institutions are looking at seriously.
Yeah, it's a great point, Dan. And in 2023 overall, Bitcoin had quite an explosive start to the year for the first month or two. But I feel like overall this year, it hasn't been, to retail investors in the outside, it hasn't been in the news and hasn't been talked about as much, although there are many developments going on with Bitcoin. But I feel like institutions and companies like Bakkt that are, as you said at the beginning, sort of working in the back end, you don't really hear about them too often. They're obviously paying attention, and they're probably pulling the trigger on different moves in their assets as well. I'm curious if you have any insight into, more institutional adoption and, increased buying pressure, or people looking ahead at maybe these potential ETF approvals and saying, hey, we should probably be getting Bitcoin while it's not in the news, rather than when it is at the top.
Yeah, no, I think that's, as the product guy, the old saying, sort of bear marketer for builders is great, because, last year and the year before, there was a lot of flashy distractions and, innovations and new things and fads, and hype and over exuberance broadly in the market. Whereas this quieter time, companies like us and institutions who are looking to enter the space, it's a lot more clear on where the long-term value is and where to make those investments, then giving some time to actually build out that infrastructure and make those longer term plays as well. So I think, as you say, right, debate over whether the ETF approval is priced in or not. Probably not. So given it's still uncertain, but having companies like BlackRock, like Vanguard, like Fidelity, give their essentially stamp of validation that this Bitcoin is a serious asset that institutions should take seriously, gives all the other smaller institutions a wake-up call that this is still something they should be paying attention to, even if it's not in the news. But also that validation and air cover that if you want to go to your boss and suggest you do something in Bitcoin, you're not going to look crazy because, hey, Larry Fink and BlackRock are doing something in Bitcoin. So I think, as you say, it's the quieter time where people are preparing and making those investments ahead of the next bull run, rather than reacting to the next bull run to make their moves.
Yeah, definitely better to be proactive than reactive. And that's a great point about, going to your boss, or just the overall sentiment from retail investors and smaller players to say, hey, this is something that's been validated by the big players and that there is an ETF available. But I feel like for those big players, they're probably not just waiting. There's already been so many years of discussion on when will the ETF be approved. And it's almost certain that it will be eventually. It's a matter of when, not if it's going to be approved. And at that point, I feel like those big companies are probably not waiting for the day that it gets approved. They've probably been already working at this for years ahead of time, maybe accumulating spot or other ways outside of the ETF.
Yeah, I mean, it's sort of building out all the peripheral products and services and infrastructure that will enable that, right? Bitcoin's, and crypto as bearer instruments on blockchains are unique, right? This isn't just a case of having a warehouse and putting gold in it or collecting, already digitized individual stocks into an index. There's a lot of infrastructure that actually needs to go into that behind the scenes in terms of the plumbing. Custody is the obvious piece, but how do broker dealers deal with it? How do RIAs and the whole end-to-end value chain and infrastructure that each of those entities need in order to support this? And we've seen with the SEC, right, a couple of their challenges to approving the ETF has been Bitcoin being a commodity, trades in an unregulated exchange market, which is relatively centralized in the US around a few sort of large players. And then having that separation of custody from exchange again, but now I think the developments there in terms of custody, in terms of institutions like NASDAQ providing surveillance agreements to ensure that markets are free and fair. All of that is being sort of solved for, and that's just taken some time. But as you say, this is not something that it's not just a case of submitting an ETF application and waiting for it to get approved and then building all of this, right? This has been built out over many years now.
Yeah, that's a great point. That there's so many other little pieces that need to come together to ensure compliance, regulation, and just a safe environment for new investors that are at that threshold where once it's approved, they're okay with investing into it.
Yeah, I think once we see the approvals and possibly we'll see all of them be approved at the same time, there will be a bit of a gold rush and one or two of the ETFs will take majority of the market share. So ensuring, again, from the regulator's point of view, their primary goal is to ensure consumer protections, and so making sure that those operate as desired is key. But yeah, as I said, I think we're pretty close on that front.
Yeah, and it looks like there's a handful of final applications. Some of the key dates were maybe January 14th or 15th or March 14th or 15th, that there's a bunch of deadlines sort of at the same time. Do you think it's possible or a likely possibility that a lot of them, once one gets accepted, they sort of all get accepted at the same time and it creates more of a competition rather than a monopoly? And maybe there's no reason to deny other applications that are very similar to ones that have already been accepted?
I wouldn't want to speculate or predict too much, but I think, the logic there being that, as you say, the applications are sort of converging to very similar. So I think it would be difficult to approve, one, but not many. Perhaps not all. Perhaps there will be some that are significantly different that don't meet the criteria. But I'd say it's probably more likely that we'll see several, or the majority of them approved at the same time. Given the similarities and given that the regulators won't want to be playing favorites or picking the winners, right, which is not their job. It's to ensure that each of them are sufficiently well protected. So I think we'll likely see many, if not all.
Yeah, well, we'll find out in the coming months. And another large event that's happening in 2024, and sort of a part of this 4-year cycle for Bitcoin, is the Bitcoin halving event, where the supply of mining is cut in half for each block. That is, depending on when and if the ETFs are approved, let's just say that it was in the final deadlines in March, the Bitcoin halving event would be a month and a half after that. Although that is known information, it's potentially already priced in. I feel like normally it's a significant year in event for Bitcoin based on the past 4-year cycles, that halving events create a lot of interest in Bitcoin. But I'm not so sure it will be, it may be overshadowed by the ETF applications happening just prior if there is big news there. I'm curious on your thoughts of 2024 moving into the halving year, and if you think there'll be some significant advances based on the fact that it is a halving year.
Yeah, no, I think it's going to be a big year, and 2 positive events is always better than 1, right? So, but I tend to agree with you that the halving, I think the next one will be less of a big deal than historically people have, and there's always a debate about, you know, whether it's priced in or not. But I think the primary theory, or at least when Bitcoin market cap was smaller and the block reward size was larger, the halving of the block reward means that, you know, essentially the inflation rate is cut and the supply is reduced. And that was probably historically more significant relative to the size of the market cap and the incoming demand. Whereas as the market cap's larger and the demand's higher, that would be my guess, be less of a significant event as the number of Bitcoin that's actually being created and put out into the market is less significant than historically it was. But I think to your point, you know, it's still a media event. It still garners attention. It still, you know, gets people talking, and that's always a positive contributor as well.
Definitely. And with you and the team at Bakkt for 2024, is there anything specifically that you guys are focused on in terms of growth and, you know, preparing for the ETFs or the halving, or just further interest in Bitcoin and the products that your team has?
Yeah, I mean, our 2 core products are custody and embedded trading, and we've been making significant investments in our custody solution, and we'll be announcing a lot of expansions to that over the next coming couple of quarters. And as you said, right, there are only a handful or a few institutional grade custodians that institutions, let alone, you know, ETFs, can turn to. So very excited on the, you know, the growth opportunities and the new features and functionality that we can add on the custody front. With the embedded trading, I know we continue to sign partners in the US, where we've been historically very focused, but we're also expanding internationally. And obviously, given the regulatory environment in the US and just the market size and opportunity outside the US, that's going to be a you know, hugely exciting piece for us. And then longer term, and sort of my personal passion and more interest over the next sort of couple of or year or 2 perhaps, is what we started talking about earlier around utility and actually leveraging Bitcoin and now, you know, layer 2 scaling pieces like Lightning, potentially under the hood. You know, users may just see fiat currency, dollars to dollars or dollars to euros, but actually leveraging those rails to move money between different entities and creating that new global interoperable instant settlement layer. Lots more to come on that front too. Wow,
very cool. Smart move on the expansion. I feel like a lot of people sometimes forget that, you know, there's a lot of Bitcoin interest outside of the US, and there's billions of people that you could potentially be serving as well. Bitcoin is a global currency, so that's exciting to hear. And on the Lightning as well, I'm definitely going to be watching for that. What is the best way, Dan, for people to follow along with your updates, or for Bakkt, and just to learn more about when these updates do come out?
Yeah, so bakkt.com, BAKKT.com, or the same at Bakkt on Twitter. And then at Danoprey, DANOPREY, at Twitter as well. Probably be the best places.
Awesome. Thank you so much, Dan. I will leave those links to the socials and the Bakkt platform in the notes of the show below. And I appreciate you taking the time, your insights into Bitcoin, custody, and what hopefully lies in store for us in 2024. All the best moving forward, and let's follow up in the near future.
Thanks so much, Ashton. Really enjoyed it.